So how do we place a spread betting trade? Most spread betting is done online. However, we can also spread bet over the telephone, on a mobile, or via the market maker trading platform, which allows us to build bespoke trading screens. Once we've decided to place a bet, we need to consider the bet size. This is the amount of money we want to bet on every individual point the price moves either up or down. The bet size always is given in pounds for each point, which eliminates any currency risk should we choose to trade foreign shares. Now, if you're an Irish client, the prices will be in euros, and the smallest trade size is £1 a point, which is equivalent to 100 shares. The bid price is the lower price on the screen and is the price of our share or commodity when we sell. We would sell if we expected the price to drop. The buy price is the price we pay when we buy the share or commodity. This is the higher price on the screen, and we would buy this if we expect the price to rise. For every point the price moves up or down, a profit or a loss is made in line with the size of our bet. One of the main attractions to spread betting is that we can buy or go long if we expect prices to rise, or sell or go short if we think prices will go down. So even if the market falls, we can potentially still make a profit. So let's get started. We've been into the research centre to check out the share price of BP. In the news section, there's an article about BP being one of the few FTSE 100 stocks making progress, albeit by a few pence, but it's gone up again today. So we think that there's more to come and would like to bet on BP shares. First up, we access the live price for BP. We can use either the search instruments function or the filter instruments tab. Using the search instruments function is simple. Just type in part or the entire name we're looking for in the search box, and the results will be displayed. On the Filter Instruments tab, click on the Share Bets directory. BP is a UK share, so expand the UK Share Bets directory and select the Energy Share Bets directory to find it. Depending on how long we want to keep the position open, we now have to make the choice between a daily rolling cash bet or the quarterly spread bet. In this example, select the daily rolling cash bets, select BP PLC cash, and then click on Get Instruments. Click through to BP PLC cash bet, and the order ticket will appear on the top right of the screen. The bid price of 430p and the offer price of 435p appear above the sell and the buy boxes. In this example, we decided to buy at £10 per point, also known as going long. Enter 10 in the amount section. We then have to decide what type of order we wish to place. As we think the price is going to continue to rise, we're going to set a limit order at which price we want to sell. For every point that goes up, we'll make £10. Now, we think the price will peak at 460p, so set the limit order at this price and then click place. We're then given a chance to confirm the bet in an order summary window. If we agree to trade at this price, click confirm. We'll receive a message that confirms the bet within just a few seconds. The trade will now be displayed in our Positions tab. We can use this tab to monitor our trade and the profit or loss we're making. If, however, we think the price of BP shares is going to fall from 435p, we'd place a sell bet. This is known as short selling or going short. So, we place a sell bet at £10 per point at 435p. We click place to continue, and if, as expected, the share price falls to 415p, we gain 20 points, which gives us a profit of £200. So, we bet at £10 per point on a share price of 435p. The price falls to 415p, we have gained 20 points. So our profit is £10 multiplied by 20 points, which equals £200. However, if we had gone short at £10 per point and the price actually increased from 435p to 450p, then we'd make a loss of £150. So we bet at £10 per point on a share price of 435p. The price rises to 450p, we'll have lost 15 points. So our loss is £10 multiplied by 15 points, which equals £150. Right, what are the costs involved in spread betting? Using our BP example, we bought BP shares at 435p at £10 per point. The margins on BP shares are 3%, which means our initial margin requirements £130.50. So when we spread bet, we are not subject to commission costs or stamp duty. However, if we hold our position overnight, we will be subject to a financing cost. This is charged on a nightly basis, therefore the longer we keep our position open, the greater the cost. So here's how this cost is calculated. The buy price is multiplied by the cost per point. This is then multiplied by the LIBOR rate, which is variable. We then divide this by 365 as interest is calculated on a daily basis. This is our financing cost. LIBOR is the London Interbank Offered Rate and is the rate that banks charge each other for short-term loans. We can see our open position on the Position tab. The main column of interest is the Profit and Loss column, which basically displays the profit or loss on our positions, allowing us to easily monitor how our trades are performing. Additionally, the total margin display shows us how much money is needed to fund all open positions. So now we've placed a spread betting trade, we've seen how to monitor trades and what costs are involved in spread betting. To explore the tools on the platform in greater detail, make sure you click onto the next video.